And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, recognised by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients. Good evening. Welcome to The Money Show tonight. And again, markets are really being defined, I suppose, by some of the fallout, to an extent. There are other factors, but some of the fallout from the election of Donald Trump for another term as U.S. president. The gold price down significantly. The rand struggling against the dollar. The dollar's value is just it's really gained in value since that. And of course, over the last couple of days, we've seen Trump make what could really only be described as radical appointments, radical nominations to fill cabinet posts when he does take over in January. And in the end, the longer term question is going to be, how does he govern? And so the question, of course, gets to fundamental values. The dollar is very strong at the moment. U.S. markets are roaring ahead. Bitcoin is kind of off the charts, really. But what happens when he governs and what decisions are made are really going to justify all of this. And in some ways, the markets might well come out of it being shown to have been absolutely right. They might come out of it looking a little disconnected from reality. You'll have to decide for yourself which way you stand on that. And we'll talk a little bit more about Bitcoin later, because what I think is going to be the fundamental question is, if the value of a cryptocurrency like Bitcoin goes up by 33%, in a 2-week period, the presumption is that Trump is going to change policy to make it more favorable for cryptocurrencies. Fine, I accept that, I understand that. But does that justify an increase in value of 1/3? The man's powers will still be limited. Yes, he's won another term, but he can't change the laws of economics, or not at least as far as I understand them. So what is that actually going to mean? One of the questions we'll be looking at tonight. As I talk to you, still so many questions about the situation in Stilfontein. Illegal miners, we're told 4,000, maybe 5,000 underground. Different reports, of course, different people in that community saying different things. And it seems to me that we are going to have illegal mining for as long as we have the poverty levels, people absolutely desperate to feed their families, feed their children, and knowing that there is stuff of value in the ground, and knowing too that there is no other option for them. And let's be clear, I don't think anyone grew up thinking that their ambition in life is to be an illegal miner and spend 6 months at a time underground, not knowing what's going on above ground in the most incredibly unsafe, dangerous conditions. I don't think anyone grew up. I don't think anyone wants that for their children, frankly. But what does that tell you about the situation that people are in? Now, in the middle of all of this, you've got government policy. And I realize it's a very difficult thing to govern. But you have a situation where there is value in the ground, and you have formal mining that says they can't extract that value at a rate that actually makes sense for them financially. And so you have the illegal mining. Somewhere, the economics of this doesn't make sense. I'm not sure what you can change, because maybe the true cost actually is in the lives lost by the illegal miners. Maybe that's where the cost sort of comes back. But the question is still, this is an economic problem that we have not fixed. And then a little later, about an hour from now, we'll be looking at small businesses, and small businesses that are described as boring. But boring is another word for consistent. And I wonder if we may need to make sure that we don't actually muddle up the two. You might be in a business that many people find is boring, suggest to you is boring. Actually, you find it fascinating, and you might well be right to. Good to hear your stories on that tonight on 011 883 0702 021 446 0567. Good to hear from you on the cryptocurrency stories as well. We've heard plenty of people praising cryptocurrencies. I wonder if you're a bit more cynical. Voice notes on 072 7021 702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, so the fallout from the election of Donald Trump for a second term as U.S. president still to an extent driving world markets today. 2 weeks ago, we were looking at gold prices of around $2,800 an ounce. Today, gold hitting $2,562 an ounce. Platinum prices over $1,000 2 weeks ago, now $932. And the rand also a lot softer to the dollar compared to where it was. All of this, of course, having a big impact on the JSE. Joe Klopper is a portfolio manager at Independent Securities. Joe, good evening to you, and thanks for your time. The gold price has been at record highs. This is still quite a big fall. Gold is obviously battling at the moment.
Hi, Stephen. Yes, absolutely, and it's most likely as a result of the stronger dollar. Which is the fallout of Donald Trump being elected the U.S. president. With his tariffs and policy plans, it is possible to expect inflation to start bubbling up again in the US, and that could cause the Federal Reserve not to cut as aggressively or even hike rates at some stage. And obviously, higher rates and a stronger dollar not good for the gold price.
Okay, so it's not just about Trump; it's about everything that follows him, including possible inflation.
Yes, absolutely. I think there's a couple of other factors that could play into it as well. He has spoken about ending the unrest or the war between Russia and Ukraine. Gold always seen as a safe haven asset. If he manages to broker a peace deal there, there's good reason for gold to trade off. But like you mentioned earlier, gold touching about $2,800 earlier this month or last month, coming from $2,000 at the beginning of the year. So gold has had a very strong run, and it is it is time for a bit of profit taking. It's not uncommon to see gold prices have moves of 20+%, I would say. So I think it's just the market taking a bit of a breather on gold.
Platinum price is much weaker as well, and of course platinum's had a very difficult time. That's had a big impact on the JSE today as well. But I mean, the outlook for platinum also very difficult.
Yes, it is, especially with the COP Congress going on. All these green energy plans and emission targets that they want to hit. Platinum and palladium obviously used in the internal combustion engines of cars. And with targets being reduced, platinum and palladium not getting the shine. I would say there's on the palladium side at least there could be the extra angle that we saw of the possibility of Russia's palladium being banned overturned should Trump be able to negotiate a peace deal between Russia and Ukraine.
It's amazing how much the American election has mattered to all of our commodities at the moment. From what we can see from Trump's appointments in the US is that he's clearly coming in with a radical agenda. He wants real radical change in that country. And that change would ripple through the rest of the world, would have a big impact on conflicts around the world, a big impact on the global economy. I mean, over the longer term then, that would have implications for the gold price too. If we're about to go through a period of, let me use the word economic instability, or maybe unpredictability is a better word, Joe. I mean, some people might see a longer-term value in gold.
Yes, I don't think that's you can argue with that. We saw a similar reaction in the gold price when Trump was initially elected in 2016. So I think once things settle down, you could see a recovery in gold over time. Like you mentioned, we could see instability, not just on an economic basis, but there is still the unrest in Israel and Palestine. And Trump has come out. He's appointed some people to his cabinet that are very pro-Israel. And any further unrest, should it include Iran or Iraq, could definitely help gold recover.
Joe Klopper, thank you very much indeed, Portfolio Manager at Independent Securities. Really appreciate the time on The Money Show this evening.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, the big news story over the last couple of days, of course, the situation at Stilfontein in Northwest. There are different reports, but it seemed at one point that around 4,000 illegal miners were underground. It was claimed they were running out of food and water, still refusing to come to the surface. You know, this happens, of course, all around the country. It's incredibly visible. In the center of Joburg, there are illegal mines right next to the CBD that you're probably aware of. Behind all of this, behind what we see in Stilfontein today, is a very organized network that sees people digging stuff up underground. It goes through some kind of smelting process, and in the end, it ends up on world markets. Bernard Swanepoel is the chair of the Junior Mining Indaba, also a former mining CEO. Bernard, good evening to you, and thanks for your time. I mean, you've been looking at this for years. We're all aware of how long this has been going on for and how big it is, and the factors that drive it just won't go away for a long time.
Yeah, it is indeed what's happening now is a human tragedy, but it is a systemic failure. You know, the country is there are lots of derelict and ownerless mines, which obviously is then the responsibility of the government. We do have legislation that caters for artisanal miners. These are small, typically individuals mining, but legally. We've got legislation that caters for junior miners and for proper mining. But illegal miners is typically really part of organized crime. Well, illegal mining and organized crime is interrelated. Often illegal mining is headed by globally connected criminal syndicates. So zama-zamas, yes, they're human beings, but as illegal miners, they are often heavily armed. They use explosives when trespassing. They set ambushes and they booby traps employees and security personnel when they try and come into operating mines. What is playing out at Stilfontein is clearly a previously abandoned mine, and so it is now ring-fenced to that. But this is a huge problem, and our country has struggled to deal with this over the last 30 years.
I mean, I'm almost certain that what will happen this time, if the miners come to the surface, and I heard what the minister said yesterday about smoking them out, but I don't know if that's possible. But the only response from government when this happens is to arrest people. Okay, then they're released, or they're released on bail, or they never really go to court. I mean, that isn't going to stop this from happening. Even if that mine was closed down today, I'd put money that in 6 months from now it'll be operating again.
So it all starts with the price of gold, which you've discussed earlier. I mean, the price of gold is super high. So if you scratch in an old gold mine and you get, it doesn't matter what gold content you get, somewhere it is quite valuable. And so this is part of the problem, is if the gold price was where it was 5 years ago, this problem would have been smaller. But there's definitely a need for dedicated legislation to define and punish illegal mining and all the associated crimes. At the moment, as you said, illegal miners can expect to escape with a slap on the wrist after being convicted of a minor crime of trespassing. So, on the one hand, these people do irresponsible things. You can say they risk their lives, and that speaks to the social context in our country. Why would people do that? Well, there are no proper and legal jobs available for them. So that's the one side. On the other side, the penalty for being caught is almost worth taking. I mean, there's just no consequences. So yes, of course, we need tougher laws, but we need effective policing. We need improved crime intelligence. I mean, that's what you need to address this, at the sort of overall system level. And then in time, you would hope that they would make arrests all the way up to the leaders and masterminds of these syndicates. And that's when the embarrassment will be to see who sits behind this, It's always the lowest level criminal that gets killed at the coalface in this case.
So, Bernard, okay, that would be the security, the police response, and I completely accept that. There must also, I think, need to be an economic response, by which I mean we need to do something about the demand. We need to find a different way to either meet that demand or work out and work on the fact that there are things in the ground that are still valuable but clearly can't be mined economically by the formal sector. And that's what artisanal mining is supposed to do. But artisanal mining is not going 2 kilometers underground at Stilfontein.
No, you've summed it up. So artisanal mining typically is how all bodies start to be mined. On surface, it's open pit. I mean, Kimberley originally was artisanal mining, and then it became deeper mining and ultimately underground mining. So deep-level underground mines are unsafe. I mean, there's no ventilation. I mean, people go for months, we read. I don't know which of these claims are. And, there are illegal systems of feeding them food at exorbitant prices. This is just exploitative. When mines are closed or put on care and maintenance and the gold price goes up, they can be reopened, but it should be orderly within the legal framework. So it's very hard. I don't know how to think about this. This is clear criminality, but these are still human beings, and these are human beings which have, in their minds, no choice other than to allow themselves to be exploited by crime syndicates. This is a really bad reflection on South Africa. I mean, we can point fingers. I am very disappointed in the legal environment. I think our police should become much more professional to prevent these things But right now, this is an embarrassment as a South African that we allowed this to happen.
What kind of policy from government would actually make a difference? I mean, apart from fixing the economy and, reducing unemployment, I'm talking about actually in the mining sector. I mean, is there any policy intervention that would work?
This is not the mining sector. I mean, this is like blaming the banks for ATM, robberies. This is not mining. This is purely illegal criminal activity. And I do think, if this is properly criminalized, not to be, ruthless on an individual, but there has to be a consequence. If you go and you do this and you become part of a syndicate, you cannot be charged with trespassing. I mean, there's clearly a logic flaw there. But we should also stop not talking about if this country's economy grows, then we deal with exploitation by metro cops, then we deal with corruption, we deal with these sort of things, because in the end, people make plans, people, and this is a horrific example of people making a bad plan, and there's always a level of exploitation here which is just not defendable. I mean, I cannot defend what is happening, to the actual people who go underground.
I mean, Bernard, the terrible thing is you and I are having this conversation now. I've been talking, everyone's been talking about illegal mining for years. In 10 years' time, I worry we'll still be here.
Exactly, unless, obviously, this embarrasses us as a country. I mean, there are functioning economies where governments will fall for an incident like this. This is how serious this is. This is clearly a collective failure. And yes, politicians must do what they must do. We need different legislation. But clearly our police and our intelligence, crime intelligence is not able to prevent and handle these instances. So this is really a failure at multiple levels.
Bernard Swanepoel, thank you. Chair of the Junior Mining Indaba, former CEO in the mining industry as well. And of course, more coverage for you on the situation at Stilfontein in the EWN bulletins.
The Money Show.
The Markets.
Viv Govenders, Portfolio Manager at Rand Swiss. Viv, good evening to you. Good to have you back on The Money Show. Conversations this evening, of course, about the gold price and the platinum price, both taking a hit, and that having a big impact on the JSE this afternoon.
Almost certainly. The gold price has come down from its recent highs quite substantially. Look, it's still pretty high. It's at just about $25,700. $2,535. But at one point in time, a few weeks ago, it was closer to $800. So it's come down a couple $100 or so. The platinum price has also been, under a bit of pressure. Unfortunately, with the platinum price, you've got to say it's a situation that's, I think, worse than gold. At least gold basically has been on the trend up, and maybe we can see some consolidation here. Platinum, on the other hand, has been heading downwards, and unfortunately for platinum, the future looks pretty bleak as we are seeing electric vehicles become a larger part of the global fleet. Platinum, of course, is not used in electric vehicles; used mostly in petrol vehicles, and also platinum good metals as well in diesel vehicles as well. And I think those vehicles obviously are going to be on the way out as people focus more on climate change.
Update from Telkom that they expect their profits to be either 5%, between 5% lower and 5% higher. The results out, I think it's next week. The market quite liked that. Their share was up 5% on the day.
Yeah, but they are seeing a massive increase in the demand for digital services. We are seeing Tulus adjusted HEPS up, quite significantly. So it must be noted that they're looking at as much as 60% up. And they are seeing strong demand coming through for their digital products, even though to some extent it's been offset by, voice tools and other products that are, a bit older. One thing I do have to say about the telecom operators is that as they switch more to the digital data situation, there comes a point at which data, unless we have a new kind of source of demand, is going to be, kind of capped off. The reason being is that because, nowadays with a fiber line or with the high-speed, wireless line, you can get as much data as you want for roughly 1,000 runs a month or so, and that would more than satisfy your TV watching needs or your gaming needs, etc., etc. And it's over time, as we see these prices decrease, we need to see some increase in demand, either ultra high definition TV or some kind of VR experience or something like that that's going to make this up. If they don't do that, unfortunately, they're going to have to look at things like, for instance, some other services like, for instance, financial products or those kind of things.
Yeah, they basically run out of room because data's almost free. I mean, it isn't, but you know what I mean. It's such an interesting point. Yeah. Obviously, still a lot going on in the US. We've been looking at Bitcoin. We'll talk a bit more about that in a couple of moments. But Bitcoin, any sign of it running out of steam?
Yeah, we are seeing Bitcoin come down slightly today. I mean, still, it's been up, quite substantially ever since Trump's victory a few days ago. It's still up, almost 30%, even after falling about 3% today. I do think that we are seeing a bit of consolidation happening for the Trump stocks, which is obviously Bitcoin, Trump assets, we say Bitcoin, Tesla, Palantir, a couple of the stocks that are, being favored by Trump because of his links to those particular individuals. I do think that, what that might shift it higher for Bitcoin at least is the proposal that the U.S. have a Bitcoin reserve, like they have a gold reserve. Some countries do have it. El Salvador, I believe, has. Bhutan has, done that, created a reserve for the currency. And some people are speculating if they do create a reserve for Bitcoin, it could be the next thing that causes the multiple, double or even 5 times increase in Bitcoin's valuation from here. But these Bitcoin advocates are always talking about another 10 bagger for the cryptocurrency.
And Tesla, I mean, that's also had a very, very strong run since the election.
Yeah, the two stocks that I actually looked at the stocks that would benefit from Trump's victory. The two stocks I had as going up was Tesla and Palantir. And Tesla has gone up substantially since Trump's victory last week. I mean, it's up still almost 30% at the moment, despite falling from its peak, which was just closer to $350 a share. This is a stock that's done incredibly well, over the last year or so. I mean, from the lows of about 140 to where it is down, it's more than doubled in the last year and a bit. That being said, you have to see what Elon Musk and Vivek Ramaswamy are able to make up that Doge, the path that they've been given. Some people speculate that, this has been a bit of a handoff by Trump. He gave them a department with a limited lifespan that doesn't exist in reality, with no real powers to advise people, and a way to basically get rid of two annoying people that might cause you a bit of trouble. Others say the reason that this is, was done in the way it was done was because both these individuals still owned shares in, rather large stakes in individual companies like Tesla and SpaceX, etc. for Elon Musk, and Roivant for Ramaswamy. And they don't want to get rid of their stakes in these shares because they see an opportunity to actually increase the valuation of those stakes. And for Elon Musk alone, I mean, over the last week, at the peak, I think he made about $70 billion just on his Tesla stake because of Trump's victory.
Sure. Viv Govender, thanks very much indeed. Portfolio manager at Rand Swiss. Really appreciate the time. Bringing the time to 6:30.
The Money Show
with Stephen Grootes.
17 minutes now to 7 the time. Good to hear from you this evening on 011 883 0702 021 446 0567. So one of the standout features of the last 2 to 3 weeks has been the incredible surge in the value of Bitcoin. It's increased in value by 33% at one point after the re-election of Donald Trump as US president. Trump has said many times he would support cryptocurrencies if he was elected president. How much power would he have to make major changes, though? Stephen Boyke-Sidley is Professor of Practice at the Johannesburg Business School, also head of the Blockchain and Cryptoverse Research Group at the Institute for Future Knowledge. Stephen, good evening. So I understand that having an American president that supports Bitcoin is good for Bitcoin. But what can he really do to support it when he's in the White House?
Stephen, there's a famous aphorism, which I'm sure you've heard, that said first they laugh at us, and then they ignore us, and then they fight us, and then they join us. And Bitcoin and the crypto industry as a whole has reached its then they join us stage. In direct answer to your question, there's an enormous amount the new president and some of the people that he's brought in with him can do. First of all, firing the commissioner of the Securities and Exchange Commission, who's been running around with a baseball bat for the last 4 years, beating up anybody involved in crypto, charging them, jailing them, sending software developers out of the country. But more importantly, Stephen, is something that was not widely reported, is that the crypto industry poured money into a special, what's called a PAC, which is a sort of a money pot for politicians, a political action committee, and supported every single congressional and senatorial candidate who was pro-crypto, and almost all of them won. there are going to be no government officials in the US who are going to go up against crypto for the midterms. Crypto is, I would like to say it's having its moments in the sun, but this moment is going to last basically forever. It is now an institutionalized asset.
Okay, so you're going to have to break this down a little bit for me, because I understand all of those things, but then what actually changes in government policy? I get removing officials who obstruct it. That's fine. I get the idea that it now becomes institutionalized in people's minds. That would certainly justify a big increase in value. But in terms of actual policy, I mean, the dollar is still the legal tender of the United States.
Right. So there are rumors, and even more than rumors, there are proposals on the table by various senators, Senator Loomis in particular, to make Bitcoin a strategic asset of the United States government. Now, that would be a financial move unprecedented since the Americans went off the gold standard in 1976. They would be saying that this asset is as trustworthy as the dollar. Now, apparently there are other countries now lining up to join, 5 of them, I'm told, lining up to join the United States by declaring Bitcoin a strategic reserve asset. And it completely changes the game, because it says to the globe, this is strong money. This is something you can trust. This is something that your government trusts.
So this would be the new normal for Bitcoin. It won't really fall much below where it is now. In fact, I imagine from what you would say, it would probably only increase in value.
Well, predicting the Bitcoin price is always been a fool's game, but I think the Bitcoin community, with whom I spend a lot of time on Twitter, at least lurking and watching, is pretty convinced that there is a floor underneath which Bitcoin will not drop. Of course, it's volatile, and there are things that can still happen. But it is now a safe bet that this is going to be going up for a very long time. Just to give your listeners a view, if you've talked about this having gone up over 30%, Bitcoin is approaching 1.7 million Rand at the moment. The expectation, it will get to 3 million Rand by June next year. And there are some people who are saying it'll get to 5 million Rand the following year. So this is the fastest and greatest movements of assets in human history. And I think that if things go according to plan, people are going to do very well out of it if they trust it.
Okay, so all of this is happening. What's happening to other cryptocurrencies like Doge, which strangely is now also the name of a government department in the US? I mean, what's happening to those cryptocurrencies that I presume is different from what's happening to Bitcoin?
Yeah, they're all riding on Bitcoin tails. The second largest crypto currently, called Ether, ETH, is also having its day in the sun. Ethereum is the blockchain on which many of the applications run on. Doge, by the way, that's not coincidental. Musk has always been a supporter of Doge. I suspect he bought a whole bunch of them when they were worth nothing, and he has now probably asked Trump to call the department Doge, and it has had the expected effect. So Doge has rocketed some ungodly amount. But the smaller coins which are riding on Bitcoin's tail, except for Ether and another one called Solana, that's a much more risky bet. It's a much more volatile bet. There'll be a lot of money pouring in. At some point, the bubble bursts and they all drop away again. There is not enough room in this industry for 1,000 or 2,000 also rands. There's enough for just a couple.
Okay, so the idea of the US then saying that a Bitcoin would be a reserve currency or strategic currency, and I realize there's been a lot of research on this and a lot of speculation, but most people still don't know where it originally came from. And I don't know if that matters or not.
Yeah, well, Bitcoin doesn't. The Bitcoin people who started Bitcoin also don't know where it comes from. As you know, the great mystery of who the founder of Bitcoin was, Satoshi Nakamoto. But it's barely relevant at this stage. If I had to ask the average person on the street, where does the dollar come from? How did it start? Or where does the rand come from? How did it start? It's the same mystery. People don't go back into history to find out the roots of the currency. So I don't believe it makes any difference.
Stephen Boyke, Sydney, always good to hear from you. Thank you. Professor of Practice at the Johannesburg Business School, head of the Blockchain and Cryptoverse Research Group at the Institute for Future Knowledge there. Marius Reitz is the General Manager for Africa for Luno. They're a cryptocurrency exchange. quite the right word, a cryptocurrency app, I suppose, a platform. That's the word I'm looking for. Marius, good morning. I presume you're seeing more demand for cryptocurrencies and Bitcoin from South Africans in the last couple of weeks.
Hi, Stephen. Yes, absolutely. I think if you look at the data, we've seen customer engagement, so customers opening the Luno apps and following the price action, and also customer activity. So customers that are actively buying and selling crypto increase over the last couple of weeks. Interestingly, the customer activity levels is still much lower compared to previous bull markets. So our conclusion there is that the retail demand has potentially decoupled from the Bitcoin price. And the Bitcoin price is currently driven by institutional demand, specifically in the US. So that's an interesting shift in market dynamic. And we also saw that on Monday this week when the Bitcoin price rallied further after the weekend. As you know, Bitcoin is a global asset. It trades 24/7, 365 days a year. And over the weekend, when there was some action on spot exchanges like Luno, institutional investors couldn't participate because the Nasdaq and the New York Stock Exchange was closed. So on Monday morning, when the markets opened, we saw a big inflow of institutional capital into the market, and that pushed the price further. So that's an interesting observation that we've not seen the retail levels, despite the price reaching an all-time high. We've not seen interest from retail investors, individuals, reach the same levels, even compared to February, March this year, after the initial news of the exchange-traded fund approvals in the US.
Do you share the optimism of Professor Stephen Sidley? I mean, do you think this is going to be a complete game changer for Bitcoin?
Yeah, look, Stephen, I think if you look at the data, Bitcoin currently is the 8th largest asset globally. So only 6 of the tech stocks, and gold is bigger than Bitcoin at this point. There are rumors that certain nation states are buying Bitcoin, holding it on their balance sheets. We saw El Salvador took the first step a couple of years ago. They own a couple 100 million of Bitcoin. We're seeing listed companies, MicroStrategy companies in the US, Coinbase itself being a cryptocurrency exchange, being listed on the Nasdaq in the US, also entering the fray. And then an also interesting dynamic, Stephen, is as we see an increase in price, we're not seeing the same change in supply, and because the supply curve of Bitcoin is not elastic. So we think that with an increase in demand, a continued increase in demand, especially from institutional investors, potentially more optimism around regulations. That's if Trump can follow through on his campaign promises. The supply continuing to be constrained because Bitcoin is a deflationary asset. And what we're seeing is that 2/3 of Bitcoin has not changed hands in the last year. So those that own Bitcoin are not willing to sell it or liquidate it at this point because they think the price will continue to go up. So increase in demand, supply that's on a deflationary curve, and that's also constrained, should lead to price movements. But it will be volatile. The price can certainly come down. That's one of the consequences of a limited supply, is that prices are naturally more volatile. So investors should certainly act with caution and do not expect to make a quick buck in the short run.
Marius Rates, thanks very much indeed. General Manager for Africa for the cryptocurrency platform Luno.
The Money Show with Stephen Grootes is brought to you by Absa CIB, pioneering cash management solutions for our clients, as honored by Euromoney Cash Management Survey 2024.
Well, continuing the theme, of course, of matters technical, cryptocurrency isn't really technical, I suppose. The big Africa Tech Festival underway in Cape Town. Lots of questions around new innovations, issues around surveillance too, and of course, what the future looks like. We've got to 5 minutes to 7, and it's the first time on the Money Show tonight I'm mentioning the phrase artificial intelligence. Siphumelele Zondi is our tech expert who we speak to every week. Siphumelele, good evening. You've been to the Africa Tech Festival several times. You're a little bit of a veteran, if I may say. What are you expecting to happen this year?
Well, you just mentioned artificial intelligence, and you said it's the first time in the hour, but it's the big buzzword for the year 2024. So that's come up quite a few times, right? It's come up in how mobile phones work and what the future of mobile phone telephony will be. AI is the big word. AI is a big word in many industries, including cybersecurity, which you also mentioned. So that's one of the issues that has come up. There have also been very many conversations that look at issues of regulation across the African continent and issues of connectivity as well. A stat that, to be honest, that I didn't know is that about 300,000 Africans across the continent or so live a bit of a distance, about 50 kilometers away from any proper internet connectivity. I didn't realize it was that high. So the conversation is, as we are moving to an AI world, how do we then bring those 300,000 closer to connectivity across the African continent in order for technology to better their lives and in order for them to be part of this fast world that a lot of people around the world are already living in?
I mean, there'll be a lot of countries that are there, governments, I know Angola, Cameroon, Congo, Ethiopia are there. They'll talk about the role of tech in helping their economies. They'll also, I imagine, be talking a little bit about how they can use tech to help themselves. I mean, Ethiopia, we shouldn't forget, banned Skype, for goodness sake. WhatsApp too, I think.
Well, those are some of the conversations, right, on what the role of government is, especially on the regulation that they do. Because when you think about Mozambique, just recently with protests, there was a time that the social media was banned. In some of the countries that you are mentioning, it's been overregulated, but overregulated sometimes not to the benefit of citizens, but to the benefit of government. So the conversation is on how regulation can then help citizens and can help the country in economies that are utilizing technology. South Africa came up as well in terms of, for example, the post office and how there have been laws that say the post office is the only one that's supposed to deliver packages, especially letters that are of a certain weight. But if you then wait for that means that things would take a while because we know the problems that the post office has had. So while we're discussing regulation, we're also discussing on how tech is developing in Africa faster than what regulation is saying should be happening. So how do you then merge the two, and how does industry and then work with government in order for it not to necessarily stifle societies, but to help economies and to help society?
We've got a minute left, Siphumelele. I mean, you talk about tech outpacing government regulation. I mean, I don't know if government regulations even begun to think about artificial intelligence yet.
No, they haven't. That's the thing. It's almost like a conversation that's being led by industry all over the world and those that are developing artificial intelligence on what it actually would be. But there are dangers to that because industry is looking out for industry, and governments need to then start looking out for the benefit of citizens. So that's the conversation that governments also need to start having outside platforms like the Africa Tech Festival going forward.
Siphumelele Zondi, thanks very much indeed, our tech expert. Really do appreciate the time. So many questions, of course, at the moment about how quickly things are changing. Also just fascinating to sort of pick up on the cryptocurrency conversation. I mean, if the US does start properly investing, it is going to be an absolute game changer for global economy and for a very, very long time.
7 minutes after 7, good evening, welcome to the second hour. I'm Stephen Grootes.
We'll talk about farmers on the Money Show in just a moment. There's so much money to be made from just farming. I mean, you look at how well, and really they've done so well, our farmers have done over the last couple of years and the markets that they've managed to get into. And despite all of the, basically everything that's been thrown at them, they've done incredibly well. And you just look at what's happening across our continent, still some arable land that could actually be farmed on some kind of sustainable basis. It's all about money. We'll talk about that in just a moment. Also, your investment school this evening, where do you put money in the era of Trump? And if you don't really know what's going to happen, and if we're expecting tariffs, where do you put your money? And then we'll talk also a little bit about what I suppose are sometimes described as boring businesses, but how you can actually make exciting money from boring businesses. That's very important. And just to remind you, The Money Show with Stephen Grootes, brought to you by Absa CIB, recognized by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
Your tales of cryptocurrency too, please, on 011 883 0702 and 021 446 0567. Well, news today from the African Agricultural Council. It's going to unlock, it says, around $1 billion in funding for projects that are being vetted. You know, of course, all of the questions facing farmers on our continent. One of them is finding the right money to be able to produce more food. And you consider the market for food, the global market for food, is only going to increase for some time to come. Ben Laika is the CEO of the African Agricultural Council. Ben, good evening to you tonight, and thank you for your time. $1 billion, it's a lot of money. What kind of projects are you going to be giving this funding to?
Good evening, Stephen, and good evening to your listeners. Thank you for having me. Well, from an African agricultural perspective, we're looking at projects across the entire value chain. So most people, when they think of agriculture, sometimes we tend to get stuck on primary agriculture. We have this conception of a very tired woman working the land with a baby on her back and so forth. And that's unfortunately the picture and the narrative of what agriculture is, has been promoted across the continent and for many years. So from an agricultural perspective, one of our main goals is to change that narrative and to control that narrative. So when we're starting to look for opportunities that are looking for funding, we're looking across the entire value chain, from primary agriculture all the way to your retailers, all the way to the end user.
Okay, so you're looking at agriculture as a whole, from the very beginning, seed in the ground, to the packaging of it and a customer eating it at home.
Absolutely.
Okay, so who then will get this money? I mean, is a retail chain going to get some of this money?
Well, it depends on who is looking for the funding. Retail stores are looking to expand. I mean, you just said it in your introduction. Opportunities in the food sector are massive. People are looking to be fed. People are looking for food. And one of our goals and objectives at the council is to achieve zero hunger by 2030. That means we need to produce more. And from a retail perspective, if you have these ambitions of expanding across the continent, then there's an opportunity for you to be able to tap into some capital that will allow you to expand. If you are a young farmer or you are looking at launching your business, maybe cold chain, for example, knowing the kind of climate that we're facing on the continent, again, that's an opportunity for you to be able to tap into some of the capital that's out there. Obviously, most of the financial institutions have their own criteria and their own preferences, and you will see some will perhaps look at opportunities across the agro-processing sector. Others are starting to look at logistics and transport. Others are looking at storage. And you still are finding some capital providers that are looking for opportunities in primary agriculture. And again, across the entire value chain.
On what sort of condition is this money available? I mean, is it a soft loan? Is it a grant? How does that work?
Well, the capital providers themselves will be able to tell you if, for this particular project, we are prepared to look at equity or a blend of equity and debt. Most of the time, the project owner himself, the business that's looking for capital, will tell us, I'm looking for seed capital, for example, or I'm looking for equity, blended finance, grant, whatever the case may be. So those criteria are determined by both the project owner and the capital providers. So if you're approaching a development financial institution, for example, and they're looking at your project, they might suggest, because of the complexity of the project, to bring in some of the partners, and they could invest as they could give you some capital as part of a loan agreement or an equity agreement. It all depends on both parties.
Okay. Are there specific sectors or specific parts of the agricultural value chain that you want to focus on? So just as an example, maybe you want to focus on tomato farming, right? So you would then, look at people involved in that particular value chain. Are you actually trying to make some allocations based on certain sectors that you really want to benefit from this?
No. We have to look at agriculture from farm to fork. We have to look at it from an entire value chain. And if the majority of the projects that we are receiving are now a bit more technical or from an agri-tech perspective, then that's great for us. Then we have some agri-tech projects that we will submit to our capital providers, and they will do the due diligence and perhaps decide where and how to deploy the capital. If you're looking for specific commodity that are looking for capital, again, those type of requests could come to us via the specific channels from the capital providers or investors. But we're not just looking at a specific sector or subsector or at a specific commodity. We have to look at the entire value chain.
Sure. The potential for Africa's agricultural sector, I mean, there's still arable land that isn't being farmed on a proper commercial basis. We spoke about the huge demand for food around the world. I mean, and the great thing about agriculture from our perspective, and particularly a Southern Africa perspective, is that while, yes, it's vulnerable to climate change and things like that, and you need rain and all of that, but it is a massive employer. And that, in Southern Africa, is really what we need.
Oh, absolutely. And this everything that we consume today is produced by small to medium scale farmers. About 60 to 70% of everything that we consume today. So the need to support small scale businesses, the need to support established businesses, literally is enormous. And if we look at the objectives that we've given ourselves to achieve zero hunger by 2030, then we need to start looking at agriculture from a different lens, if you will, and understand what is required to be able to attract that capital. Because our focus is to bring in private sector investments into food and agriculture, then the key for us to be able to do that is to start looking at more than agriculture. How do we commercialize agriculture from small-scale farmers? How do we support them with all the tools and all the capital that they need to be able to produce more? And from an investment perspective, I'm looking at the bottom line. If I'm investing into this project and this project is able to expand across the continent, is able to resist the climate change, is able to incorporate the latest technology into the production chains, then this is certainly a viable investment for me. And that's part of the work that we need to do as a community, as Africans, is to start looking at agriculture from a different lens. Can we modernize agriculture? Once we start modernizing agriculture, then we become a bit more resistant to the climate change effects. Once we're able to do that, then we're able to bring in and attract the capital that is required to expand. Then we don't have to always rely on public sector funding. We have to look at the private sector and attract the private sector so that it can play a key role in developing African agriculture.
Ben Laika, thanks very much indeed, CEO at the African Agricultural Council. Well, you know, if you consider the importance of agriculture, literally growing for food, not something we spend nearly enough time talking about. And there have been huge changes, of course, in the agriculture sector in the last little while. So, you know, there's a lot to look at, of course, in the sector. We'll be looking at some of that as we go. I must say, though, farming still, everyone tells me, a very, very tough job. 17 minutes after 7.
702. Stephen is on X.
At Stephen Grootes.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. Well, some businesses are sometimes described as boring. I've always thought for someone running that business, working in that business, boring is just another word for consistent. And actually what you're doing is creating value. And that's the exciting thing. Ryan Cohen is the Chief Relationship Officer at Merchant Capital. Ryan, good evening. I suppose I'm going to start by looking at what is the definition of a boring business. I mean, is any business really boring?
Good evening, Stephen, and good evening to your listeners. Boring businesses they're the backbone of every economy. They are essential services or goods provided, but often they're uncomplicated businesses. Maybe to give you a practical example, think about your neighborhood. Think about the high street, or perhaps think about the neighborhood shopping center. There are certain mainstay businesses there that are deemed boring. Think about your hardware store, your pharmacy, your pet store, your grocery store. Well, these businesses may not be, let's call it cutting edge, they are definitely essential and often extremely successful.
I mean, the great example is possibly a hairdresser. I mean, it's the kind of business that can stay there forever. As long as they're people, they will want their hair cut.
100%. I think you strike on something important. These businesses are stable, they're predictable, they've got predictable revenues, they've got stable cash flow. Think about your hairdresser or your beauty salon. What these guys have is they've got guys and girls who are going into the salon throughout the month. So there's this consistency of revenue that's going through the whole month. Often these businesses also have they've got lower competition. If you think about the exciting sectors are the sectors that tend to attract a lot of the competition. Where in boring industries there may be slightly less competition, and in some instances this could allow for better margins.
Are there trends in this? I mean, are you seeing trends in what opportunities are open to entrepreneurs and businesses that are described as boring?
There's a fascinating trend. In the States, they've actually coined it the silver tsunami. You've got a huge amount of small business owners who are reaching retirement age, and they've got no succession plans in place for their businesses. The next generation doesn't necessarily want to take over the family business. And like in order of magnitude, they estimate that there's probably about 2.3 million businesses that employ about 25 million people, which is crazy. So if you now take this, let's call it this trend, could it become a reality in South Africa? So I looked at a bit of data, and what I found was that there's about 6 million people in South Africa who are over the age of 60. Let's assume that a small portion of those people are business owners. I think that this provides a real opportunity for youth to get access to their own businesses. And what I've been thinking about is how can we advocate for boring businesses in South Africa? How do we help people that are reaching retirement age sell their businesses? Are we able to change the perception around these businesses, which on the face of it may not be sexy? However, when you actually go and you look at the detail, they are essential, they're profitable, and they're super important to the communities within which they function or they operate.
I mean, a lot of people would suggest that actually I don't want to do this because it's been done before. In this case, the been done before is actually the selling point.
That's 100% right. I mean, they've been run by seasoned professionals. These businesses often have long-standing, established customer bases. And it's a hell of a lot easier for an existing business with a trading history to get access to funds when they've got a requirement for working capital or anything of that nature. I mean, that's our business. We are a working capital provider to these businesses. And when I came across this boring business concept, I had like an aha moment. These businesses it's almost like an oxymoron. I was thinking to myself, I'm passionate about boring businesses. They're resilient. They're able to deal with the ups and downs of economic cycles. And these businesses were really put to they were really stress tested during COVID, where you had a lot of these businesses that were actually deemed essential services. And as a result of it, they were able to trade through the turmoil, and many of them actually came out on the other side in strong financial positions.
It's amazing to sort of see how well these things can run. And I suppose, in some of these situations, really what you're doing is making something work. I mean, they're often called a sort of meat and potatoes business. So what makes them so successful? Is it just the same thing? You also have to provide a consistent service. I mean, you have to still, no matter what happens, do a good haircut and get value. Your customers have to find value, otherwise this isn't going to work.
100%. So you need to be consistent. You need to make sure that you are staying on trend, making sure that the products that you take into market are delivered on time, at the right price, that your customer service is top notch wherever possible. Try and streamline, let's call it technology bits in your business to try and make it as efficient and friendly to the customer as possible.
So what is it about this kind of business that an entrepreneur should be looking for? I mean, why would you invest in a boring business? And Ryan, you know this better than I do. A lot of entrepreneurs think, well, I'm going to go into business to change the world. You're not going to do that in a boring business necessarily.
Yeah, so it's an interesting question. If you think about millennials and Gen Zs, a lot of them, they grew up with the internet and social media. And often there's this misconception that in order to be a successful entrepreneur, you need to start something amazing and you need to revolutionize an entire industry, like take something from 0 to 1. But I think there's a huge opportunity in boring businesses. There's an interesting book called Searching Through Dustbins, and the author speaks about boring being good and staying away from exciting if you want to be rich. He says boring businesses, while they may have low barriers to entry, they have a very high chance of success. So while on the face of it, these businesses seem boring, there's ways to innovate in them. I mean, that may be leveraging technology or focusing on best-in-class customer service. Boring businesses can be made fun.
I mean, look, running any kind of business is interesting and comes with challenges and things that you have to overcome through a day and things that make you sort of be glad to leave it and go home, but also may be satisfied. And I suppose, Ryan, actually, this is most of the world. I mean, very few businesses change the world. I mean, very few, rarely as a percentage. Most of the world is doing the same thing and offering value in the same way for quite a long period of time. And that's good for the customer and good for the business owner over a long period of time.
I have to agree with that. I mean, in certain of these traditional businesses, the entrepreneur can build a really strong foundation and create an opportunity to actually effectively scale. So take what is learned in location one, and then open up a second location and a third location. And to your point, don't need to revolutionize. Just continue doing what you're doing well and providing a service that your customer will be happy to pay for.
Ryan Cohen, thanks very much indeed. Chief Relationship Officer at Merchant Capital. Really appreciate the time.
The Money Show.
Investment School.
So, you know that the world is in a very interesting spot at the moment. I mean, the world's always in an interesting place, and you can't really say some times are more interesting or complicated than others. But there's certain things that you can see. We're about to have a president re-enter the White House who has said that he wants to impose 60% tariffs on China. He wants to impose tariffs on Mexico. He wants to impose tariffs on the rest of the world. Beijing, we know, will respond at the same time. We have other issues, of course, around what we see involving cryptocurrencies, for example. The point is that we're in a place where investing could be about to get a little bit more complicated. And one of the trends I would suggest of the last 30, 40, maybe 50 years has been that we've seen more and more companies being involved in more and more countries. There's a great example of this. Every day, one of the big movers that you will hear us talk about on the JSE is Naspers. And that's mainly because of an investment in China. Now, we may not be Chinese and we may not be American. And if China and the US get involved in a trade war, what does that do to Naspers? Those are some of the things that we'll be looking at today in your investment school. Grant Nader is Portfolio Manager at Benguela Global Fund Managers in our studio. Patrick Matidi is Head of Equities at Alawani Capital Partners. Gents, thanks so much for speaking to us tonight. Patrick, let me start with you. Am I right to suggest that this is about to be a more complicated time than something we've been used to for, say, the last 20 years?
Good evening, Stephen, and good evening, Grant. Thanks for having me. Look, it's always complex, right? I'm almost 3 decades in the markets, and I've yet to wake up and think, this is going to be easy. I think the main issue is what's at play and how do we respond to that. So if you look at the incoming president of the U.S., yes, we've had a bit of a glimpse in terms of what we can expect, given his last term as president. And I think, it's fair to say that we can expect, the same, if not a lot more, right, in the second term, which still makes it difficult, compared to the last time and compared to the last 20 years plus. in that uncertainty, unfortunately, is the only permanent in life, and especially in volatile markets.
Patrick, not a great line, but we'll try and improve that, and there are lots of noises behind it. Grant, Nader, would you agree with that? That actually, yes, complexity is part of life. Yes, it does seem now, it seems to me as a journalist that something is a little bit different this time around.
Yeah, Stephen, thank you. Good evening. I think there could be something different. But we have seen some of this roadmap before. We saw it. Trump's already had a term as president, and it was rather chaotic. I think this could be less chaotic because I think he's had time to think about what went right and what went wrong. He's got different people with him and surrounding him. So it might surprise us a little bit to the upside in terms of the chaos. But I do think, not to the downside, but I do think the escalation in the global geopolitics is going to change the game somewhat. And so we've got a lot to deal with, and it's not that clear yet how these things unfold. He hasn't even decided who all of his key people are yet. So I think there's a lot of uncertainty. I do agree with you, but I also agree with Patrick in that uncertainty is permanent. You can go back over time. There's always uncertainty, and the market still goes up.
Okay, so where do you invest in these things? What do you do? What don't you do? I realize it's a big question.
So there's obviously certain pockets where there's obvious pressure points. The first one being if they pursue this strong growth policy, this America First agenda and tariffs on the rest of the world, the natural instinct, and you've already seen it unfold somewhat, is it's just good for the dollar. So the dollar strengthens. The knock-on from the dollar is that commodities fall. Commodities fall because they're priced in dollars, and then that slows global demand. So the commodity stocks have come under pressure. So you've also be aware they look cheap, but there's also risk around sectors like that. Just for example, and then of course China may come with their own countermeasures. So one needs to look not just at what they're saying, but what are the second and third order effects of the kind of things that they want to do, whether it's related to the currency, to the interest rates, to the deficit, and all of those knock-ons into the economy and the market.
So, Patrick, if you look, for example, at the gold and platinum price, they've both taken a huge tumble. It's not just Trump, there are various other reasons, although a strong dollar is a major part of that. I suppose it's also how long you're investing for, right? If you're investing for 10 years, well, then you're probably going to keep a lot of your gold. If you're investing for 4 years, well, maybe that's not such a good idea.
Yeah, absolutely. I think it's they always say it's not about timing the market, but timing the market. That make a difference in terms of the amount of wealth you're able to accumulate from the market itself. So we always encourage people to go in for the long haul. Stay the course because you will have swings and roundabouts along the way. And in situations like this where you do have heightened uncertainty and you do see markets and prices sort of coming off, it tends to be one of the best entry points. When you look back 10 years from now to say actually at the height of that level of uncertainty, the opportunities that came about, they are unlikely to recur when there is better certainty and clarity going forward. So you always need to use, they always say, don't let a bad crisis go to waste. So in this case, hopefully it's not a crisis, but certainly it's an opportunity, especially for those who have a long-term mindset when it comes to investing. Use this weakness to actually accumulate some of the cheaper assets that in time will do well for you.
Grant, one of the questions that I'm fascinated by is so many companies now are sort of global in nature, or certainly they operate across multiple jurisdictions. Now, you would think if there's going to be a big trade war and China and the US are at the center of it, life could just be a lot more complicated for those companies. And I wonder what that does for investment decisions around them.
Yeah, without doubt. So there's a lot of US companies that will be protected as the tariffs go up, and it'll look optically great. But of course, a lot of them make a lot of their money out of China, or they source a lot of their production. There's very little that's made in the US. From almost the entire iPhone is sourced outside of the country. Nike, for example, sells a huge amount of their revenue generated out of China. So it is really an incredibly connected world. I think we are fortunate in this particular time that a lot of South African companies are not that globally connected. So we actually have some fantastic companies that are fundamentally won't really change as this world as this unravels somewhat in the world.
I'm going to come back to that in just a second because I'm fascinated by that as well. Patrick, I mean, obviously one of the big questions is how much money do you put in the US? You don't really know what's going to happen. If they do have tariffs and high inflation, well, it's difficult to kind of predict the future. I mean, would this be a time to invest in US shares, or would this be a time to actually move away from them?
So I think there's a bit of a cyclical story attached in answering that question, in that, as Grant articulated earlier, if you look at the sequence of events, assuming that Trump comes in and actually carries through with his tariffs and deregulation, that there is a bit of a positive story that could play out, especially for let's say mid or sort of a medium U.S. focused entities. That could benefit from that, because the immediate jolt will be economic uplift, which is then good for corporate earnings and therefore good for financial markets going forward. So there could be that play, but I don't think that will be long-lived, because if the policies continue, you then run the risk of inflation, which means therefore that the Fed could start to hike again. And not cut as the path currently predicts, and in that case, those companies will then start to feel the pinch, right, as a result of those higher interest rates. So you kind of need to be nimble in this environment, as a professional investor, in that you need to see opportunities as they come. Go in there, but don't stay the full hog, because as I say, things can turn very quickly, and in some instances, if you overstay your welcome, you could come out sort of blighted. So if you look at the U.S. as an investment destination, over a 5-year period, I think it could be very tricky, especially given the Trump presidency. But I think for the next 18 months, though, there is a bit of a play there. Just given the immediate reaction, as we've seen over the last couple of days, as and when he got confirmed as the incoming president, we saw the markets run quite strongly, especially the equity side. The bond side, not as much, because again, we're starting to price in that higher inflation to come through as a result of some of the fiscal policies that he may implement, which may be inflationary going forward.
Grant, would you agree with that? 18 months in the US?
I think 18 months, even up to 3 years. And I think that because the growth agenda, so, remember, companies earn money in nominal terms. So if the economy grows at 3% and there's inflation of 2.5%, that's 5.5% nominal GDP growth. Plus, they're very good at operating leverage in the US. They really can turn revenue into profit. So you're getting, 10, 12, 15% growth in the earnings in those companies. And I think that will, especially in the small and mid-cap space where the valuations are not so stretched, you could see some opportunity there. And as the government continues to spend and regulations unfold. So I think it's a constructive story. Just don't chase and don't overpay. Just you need to be a little bit focused.
Grant, there's a lot to talk about South African companies that are based here. And yes, they might be exposed. All companies are exposed to globalization in some way. I made the point the other night, it's been made many, many times, that, China exported deflation for quite some time. That may be ending now. But obviously there's some South African companies that stick to their knitting. They make a lot of money from their knitting on a consistent basis. An example might be, we spoke to the CEO of the Premier Group earlier in the week. They make primarily food. I would suspect that if you're worried about turbulence, that's a good place to put your rand and keep it as a rand.
Yeah, absolutely. That's a classic consumer staple. No matter what happens, people need to eat. And they're predominantly baking and milling. And that's not going to change. People will eat, and no matter, it's the last thing they won't spend on. So it's a very safe place to be. But there are other SA companies that are focused inwardly. They've got their own growth trajectory based on what they are doing. You can think of the education sector, your Curros and Stadios of the world. You can think of Capitec that's driving growth. So there are definitely some stars, some high quality businesses in SA that are ring fenced to some extent. They're not completely immune, but your staple type of companies or those with their own growth that are in control of their growth, those are great opportunities if you see a pullback on this noise.
Patrick, are there some companies that you would look at here that you think, you want to stay in the South African market, and these are companies that to an extent will be ring fenced from what's happening in the rest of the world?
Yeah, absolutely. Over and above some of the names mentioned already, if you just look at the banking space, that's one area where, it's almost like a barometer of what's happening in the economy, right? So with a bit of rate cuts coming through, a bit of a growth uplift, just given all the low base that we've come through off, and a bit of, let's say, structural reforms that are coming through. The banks are offering a lot of value, and they tend to almost be the bellwether, right? Because they kind of capture pretty much every corner of the economy. So the likes of Absa, despite its own issues, I guess, is offering a lot of value. Nedbank. So you've got a bit of choice there in the top four. Maybe not so much Capitec, just because of valuation, not so much the story. The story is fantastic, the growth is there, but you are paying quite a premium for that growth. And then elsewhere, if you look at the hospitals, right? They got depressed with the whole NHI thing, but they actually are poised to be the net beneficiaries because the public health system just can't cope, assuming the NHI does get implemented in its current state. So there you are getting, fairly decent assets that are very, very hard to replicate, at a fraction of the premium, that you could get, elsewhere in the world. So there's a lot of pockets of value in SA. I think we just need to be a little bit more discerning and just, box smartly, as we say.
We're speaking to Patrick Matidi, Head of Equities at Alawani Capital Partners, and Grant Nader, the Portfolio Manager at Benguela Global Fund Managers, this evening on Investment School. Where do you invest in a time of great turbulence? 10 minutes now to 7.
The Money Show with Stephen Grootes is brought to you by Absa CIB, pioneering cash management solutions for our clients, as honored by Euromoney Cash Management Survey 2024.
Continue Investment School this evening, where to invest in a time of global turbulence. Grant Nader, Portfolio Manager at Benguela Global Fund Managers. Patrick Matidi, Head of Equities at Alawani Capital Partners, with you tonight. Patrick, there's, I suppose, a question I would like to ask about diversity. In other words, normally, in normal times, whatever those might be, you would want to have a little bit of money in lots of different places around the world. So you put a bit of money in each market. Does what's happening with Trump and the idea of global tariffs change that approach in any way? Might you need to, yes, put money for 18 months to 3 years in the US and then take it out? Might you need to consider what you're doing in China? Or do you need to still follow that idea of just having a few eggs in different baskets?
Stephen, the one so-called free lunch in investing is diversification, right? So you absolutely have to diversify no matter what the circumstances. And it's purely because you just never know, right? So the world and the outlook is never, unitary. There's always, a range of possible outcomes, just given what the current situation may dictate. So you can't, afford to just put everything in one basket or one stock with the hope that, that is the horse to back, because you'll never have perfect foresight. You never have 100% certainty. So diversification means that even if one or two ideas don't work out, hopefully 3 or 4 others, in your portfolio actually come through. And on a net basis, you're still looking pretty. So you absolutely have to diversify no matter what the circumstances are.
Diversify all the time, Grant?
Yeah, I definitely agree with that. I think, just take a good example. If you look at South Africa, this past few months since the election, everyone has been super optimistic. Everything's playing out, the self-help story around inflation, interest rates, two-pot system, all of these good things. All of a sudden, within a month, the rand is the weakest currency relative to an entire basket of emerging markets. I think the rates cut outlook is starting to soften somewhat. If this persisted, or if it was a bit more extreme, suddenly this whole sort of favorable outlook can start to be questioned. And if you'd put all your eggs into that basket, just purely SA focused, you'd now be starting to ask yourself, what do I do now? Where do I go? Or should I be, holding on? So you don't know. As much as it looks obvious, it's never that obvious in hindsight.
Yeah, no, absolutely. We do need to talk a little bit about one of the other big stories that's been driving markets, and particularly US markets, earlier in the year. And I'm talking about artificial intelligence. And I wonder if, in a way, just things become a little bit more difficult to predict. And Patrick, I suppose my question is that while the underlying value of those assets and those companies and what's actually happening may not change, the geopolitics has changed. Do you think that what we're seeing in terms of, international geopolitics and tariffs is going to change the underlying value of those companies at all? The fight will still be for whoever gets to control artificial intelligence, surely.
Yeah, I think that there is that element, but I think that there is a bigger war raging in terms of the sourcing and supplying of the semiconductor chips, which actually drive the whole AI space. And indeed, if you do get this so-called trade wars driven by nationalist interests and an end, you do run the risk of some of the fundamentals actually impacting the underlying companies in an active way. And therefore, you need to be alive to some of those risks at a geopolitical level, and to the extent to which they can actually scupper, the sustainability of some of these businesses. But for an ordinary, typical business, it's largely a sentiment issue, which can, over the shorter term, impact the share prices and therefore valuation. But if you try and ignore some of those short-term noises, then you can do well, buying into that weakness and hopefully in time coming through. But I do worry that there are some bigger sort of battles going on that can actually that do have the impact of actually scattering the investment case in some of these businesses.
Grant, you're nodding your head a little bit there as Patrick talks.
Yeah, certainly. I think Patrick speaks a lot of sense. And I think this national security interest, the desire for AI champions, is going to drive continued investment in the space. You're going to see competitive forces investing. So China's going to be aggressively chasing an AI rollout. America's chasing it. The West is chasing it, their own sovereignty. It's become it's a national asset, the security around this technology. So I don't think the investment into infrastructure and the build-out is going anywhere anytime soon. But of course, as a South African, we got to ask ourselves, well, how does it impact us? And I think just looking at a simpler level, there's a lot of companies in South Africa that are still able to benefit from those tools that AI is providing. And actually get ahead of their competitors. And if you think of a ShopRite, it's a very good example. They've got so many data points, so many numbers to crunch, and they're using those insights to outperform the competitors. And that's just on a simple level. So you want to find companies that are embracing this change, because they're going to be left behind if they don't.
And I suppose that really is the way, is to look at what's happening in South African companies. Grant Nader, Portfolio Manager at Benguela Global Fund Managers, Patrick Matidi, Head of Equities at Alawani Capital Partners. Thank you both very much indeed for coming through tonight for Investment School on The Money Show.